Cold still, clear eyes. Here is what moved while you slept. It is Wednesday, the 5th of August, 2026. Last night, the most secretive company ever built was forced to publish a number it had guarded for 6 years. The number is 12 million. Bitcoin trades at 64,100 as of 5 o'clock this morning Eastern, up nearly 0.9%. Our engine has it green, and this morning it is not standing alone. 17 alerts fired yesterday, and the list is the whole argument. At 1:30 in the afternoon Eastern, gold turned its optimized trend bullish, silver with it, the Nasdaq with it, then Integris, Coherent and Dell, materials, optics, servers. Then at the 4 o'clock bell, a second wave, Micron, Astera Labs, Robinhood, Intelia, and the long bond. Now look at our macro layer. 6 days ago, I stood here and told you there was not one bullish anchor left standing on this board. Not one. This morning, there is not one bearish anchor. The broad market, green. The Nasdaq, green. Gold, green. The long bond, green. Bitcoin, green. The regime is marked risk on and pointed up on our read of the InvestAnswers Decision Support System. Understand what that actually is, because 5 simultaneous bull markets is not a thing that happens. Stocks and bonds are supposed to disagree. Gold and the Nasdaq are supposed to disagree. When every one of them goes green inside the same session, they are not all winning. The thing they are all priced in is losing. Gold at $4,080 the ounce, silver at $59 and climbing. $1 soft since 2 treasuries walked into the market together last week. Hard money trends green, now to last night, and the book that finally opened. SpaceX reported its first quarter as a public company after the close. $7.81 billion of revenue, up 92% year-on-year, against a consensus near 6.93. Adjusted earnings nearly tripled to $3.5 billion. The net loss cut roughly in half to $541 million. But the revenue was never the story. The story was Starlink, and the number no outsider had ever seen. 12 million subscribers, double a year ago, up 1.7 million in a single quarter. And the margin, 38.6% operating margin on that connectivity business, against the 36% the analyst class had modeled. Now, the figure most desks read as the blemish, and that I read as the thesis. Average revenue per user fell to $66 a month from $85 a year ago. $19 a head, gone. The reflex is to call that pricing pressure. It is the opposite. They doubled the subscriber base while cutting the price by a fifth, and the operating margin went up anyway. Sit with that. That combination is not available to a company facing competition. It is available only to a company that owns the sole pipe into places that have no other pipe, choosing what those places can afford, and watching the fixed cost of a constellation already in orbit spread across twice as many terminals. Every marginal subscriber riding hardware that is already flying is very nearly pure margin. That is not weakness in the price. That is scarcity being harvested, and the tape hated it. Shares ran as high as 125 during the session, and by the time the after-hours dust settled, they sat back near 115. The entire move, given back. They beat on revenue, beat on margin, beat on the one number the whole valuation was built on guessing, and got sold, with the first tranche of insider stock unlocking tomorrow. Here is why they got sold. $18.4 billion of capital expenditure in a single quarter, more than 6 times what it spent a year ago against the 13 billion analysts had modeled. Roughly 16 billion of it went into one thing, artificial intelligence, because the company filing these numbers is not a rocket company anymore. The artificial intelligence arm folded into it in February, and last night the market got its first clean look at what that division is. $2.5 billion of revenue in the quarter, up 247%. And the machine underneath it, the Memphis campus, stood at roughly 1.1 million NVIDIA equivalent chips and 946 megawatts of power as of Sunday, built for something near $36 billion and tracking toward better than 1,500 megawatts by early next year. A megawatt runs about 1,000 homes. They are building a small country's worth of electricity to think with. And there is a customer on the other end of it, disclosed on the call. Anthropic pays $1.25 billion a month for exclusive access to the original Memphis site alone. Not a letter of intent, a monthly bill. So the bear case and the bull case turn out to be the same sentence. Spending is running far ahead of revenue. It is supposed to. That is precisely what building a utility looks like from the inside. And this market has never once been comfortable watching it happen in daylight. Management pulled its trillion-dollar revenue target forward a full year to 2030. You are free to discount the promise. You are not free to ignore the electricity because the electricity is already poured. And watch where that money lands, because our board watched it land yesterday. On the call, Musk said, memory demand is growing something near 200% a year. Jensen Huang, the same afternoon, put the semiconductor industry at nearly $8 trillion a decade out. Micron's high-bandwidth memory is contractually sold out through this year, with capacity spoken for through next. Prior generation contract prices are already up a fifth. The chairman of SK Hynix says the industry runs roughly 20% short of demand through 2030. That is this entire decade in one line. Intelligence is being made abundant. The memory and the megawatts that carry it are not. Short abundance, long scarcity. And the money is rotating out of the chip winners and into the physical bottlenecks. Power, materials, silver. That call is not new. What is new is that our engine flipped silver green at 1:30 yesterday and Micron green at the bell, with a raised forecast out of Palantir as the spark under all of it. One more, and it settles a question that has sat on this board since June. Tesla's head of artificial intelligence told investors on Monday that the robotaxi fleet running public roads right now is already carrying early builds of version 15. Roughly 40% of the 7 major tracks in that release merged and leaving cars taking paying riders today. The full release, Musk still puts at late this year or early next. Now hold that against the hardware. Trackers counted 245 finished cybercabs staged at the Texas plant in mid-July, and a 14-vehicle batch turned up in a Charlotte lot on the 27th, the first multi-car staging anyone has spotted outside Texas. So the steel is built, painted, and parked. It is not waiting on a factory. It is not waiting on a permit. It is waiting on a software release that is 40% merged and shipping into the fleet in pieces in production with passengers aboard. That is a far better problem than the reverse. Anyone can write brilliant software for cars that do not exist. Very few can build 245 of anything and have the code be the slow part. Carry this into the session. The most secretive company on earth opened its books. The hidden number beat every model, and the market sold it anyway, because it is no longer priced as a rocket company. It is priced as an electricity company that happens to fly. Meanwhile, our own board went from 0 green anchors to 0 red ones in 6 sessions, every asset class turning together, which tells you far more about the denominator than about any numerator. And on sentiment, InvestAnswers published overnight under the title The Last Optimist, arguing the crowd has never been more sour, while their own system diverges from the despair. August is historically Bitcoin's worst month. Both can be true at once. That is exactly what a bottoming process feels like from the inside. Never comfortable, never obvious, and it does not ring a bell when it is finished. Own the one thing that never has to open its books because it has never had any to close. This is Warband as a service, Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Stand armored, stack relentless. Let the weak hands feed the fire. Skål!